Well, good morning, Shawn.
Good morning, Steve. Good to talk to you.
It's good to talk to you, my friend. So thanks for taking time with us today and going over a few questions regarding whole notes and how you earn a predictable 8%. And I guess the first question would be maybe the obvious question. I know when I was looking at investing myself, there's some level of concern investing with any entity. And what made you trust and decide to invest with his capital funding?
Steve, for me personally, there were two things that I was concerned about when I was shopping, if you want to say it that way, for a new form of investing for my retirement and for other investments. And one was the idea that the funds that I would be investing would not be used by the broker or by the custodian to fund things that I was morally opposed to, that things that would be objectionable or things that would be questionable. And the other is that I wanted to make sure that the people that I was working with were people of high moral character and integrity, because I didn't want to be personally or professionally associated with folks that had questionable character. And I got high level recommendations about his capital group, and then from the very beginning learned that his capital is literally the idea that everything that we own or everything that we steward, everything that passes through our hands comes from God and belongs to God. And that the purpose of his capital was to affect as much good in the world as possible, while doing that honorably and in a dignified way. And so that was really the attraction point for me, was finding a group of people and an organization that had that type of reputation.
How easy was it to get started, Shawn? I mean, can you explain the process to maybe a new investor that's never done a whole note investment before?
Yeah, sure. And with the understanding that there are a couple of different ways to approach this. For me personally, it was a rollover from a group of really poorly performing mutual funds that I was disappointed with over the 10 years previous to the rollover. But it was really pretty easy when I discovered that I could create a self-directed IRA, which is at this point for us held at New View IRA in Orlando, a terrific group, once again with the same level of vetting for integrity and character. That's a great group. If you're doing a rollover into a retirement situation where your funds are going to be locked until retirement, you have to have a custodian, obviously, for a self-directed IRA. So in my research, I put the two together. I discovered that my investment funds could legally and safely be used in real estate investment, but that I had to have a custodian in order to be able to initiate that self-directed IRA. And so I met with New View IRA, and then I met with his capital and put the two together. And literally within just a few weeks at the outside, my funds were up and running and deployed. It was really very, very easy.
So you, Shawn, actually have experience with using IRA self-directed funds as well as your own capital.
That's right. And as I've talked to other people, there have been a number of other individuals who have taken multiple approaches to rolling their funds into this secure investment with real estate that's secured by the asset itself. And for example, there's a gentleman in Texas, a good friend of mine, rolled some funds over from the equity in his house. I just talked to a gentleman this last weekend who had no idea that dead equity, that equity that was sitting stagnant in his home, could actually be rolled over from or used from a HELOC, home equity line of credit, and then you pay the interest and then reap the yield from a really high yield investment at 8 or 10%. So one gentleman took the equity in his house and initiated an investment in passive whole notes with his capital. And then my own father was really disappointed with his performance of his retirement funds, and he was in a situation where he has mandatory drawdown type of situation after retirement, and he was just really frustrated with the poor performance and the losses and the uncertainty of the monthly fluctuations and that sort of thing. And so he rolled a healthy sum into passive whole notes, passive investments through whole notes, and is doing really, really well. I was just with him for Thanksgiving just a week or so ago, and he was telling me that he was just tickled pink doing backflips because his investments are doing so much better than they were previously. So there's multiple ways to approach this. Mine, for one of our investment vehicles, was a rollover from mutual funds from a 403b into a self-directed IRA, and then I've had over the course of the last couple of years a number of whole notes that we've held and then rolled over into a new one as soon as that term expired. But it's been really, really good for us.
Wonderful. Your dad, you referred actually several investors to his capital funding for whole notes. Your dad actually is like my parents. He actually relies on that for his retirement. And you are using it in different ways, not only for your retirement in the future, but you're also using it in a different entity, and you can expound on that if you'd like to. And what have your results been so far? Why is your dad tickled pink, so pleased with this over say the stock market?
Well, he and myself included. I was in some medium risk mutual funds. You know, I'm not as young as I used to be, so I was trying to mitigate my risk a little bit. But even with a mitigated risk series of funds, I was still losing thousands of dollars over the course of a 10-year period. Just lost thousands and thousands of dollars in my long term. And they always say, you know, in the stock market, you have to stick it out for the long term. Well, my long term is getting shorter and shorter because I'm going to be 55 in just a few weeks, and I don't have time for long-term losses. That's just not profitable for me or for my family. So when we rolled over, I've been in multiple, over the course of the last couple of years with you, Steve, been involved in multiple whole notes, and had significant returns. And I, because it's in my retirement, I roll 100% of that back to the custodian, which then is reinvested in the next project. And it's been doing terrific for me. For my dad, he's on a mandatory drawdown from his retirement fund. The IRS mandates that. I still don't understand what that's all about. You should be able to do whatever you want to with your, with your investment funding for retirement. And then I just learned this last week that the goal, the federal goal, is to get you to zero before you pass away. That's just unconscionable to me. I don't understand why they force you to draw that down and leave no legacy, but that's a different issue. But my dad is really, really pleased because he went from, a really highly volatile type of a situation where he doesn't work, at his job anymore. He's on a fixed income, and so this fluctuating income really was putting him in delicate situation, putting him in a pinch. And so now he is just really, really pleased, because not only has he almost doubled the return that he had previously, but it's the same every single month, and he knows he can count on it with confidence without having to worry about, having a low month, or having to save up over a couple of months so that he can prepare for a low month. He's completely solidified his returns now, and it's a great deal of peace of mind for him now. So he's really happy.
How is your confidence from your experience working with His Capital Funding as far as their vetting system, as far as when we bring on a borrower, vetting the property, assuring that it is a solid deal for all involved?
Steve, that was one of the first questions that I asked because I was tinkering around a little bit with real estate investment before, and that really was the hang up for me, was the level of risk involved at my level of experience in vetting not only the property individually, but the market and the timing of insertion into the market with that property. I just didn't understand. That was too big for me. It was too much information, too much risk for me. And so I looked back over the history, the learning curve of Rick Malero and you and His Capital, and watched your performance and how these things had all come together. What I discovered was that you guys, His Capital, errs on the side of safety to a very, very high degree. In other words, there's a high level of refusal of potential investment properties for the reason that His Capital wants to be absolutely certain that the old phrase is the ugliest house on the block, in the best neighborhoods, kind of, for a residential scenario. And that's absolutely what has happened. You guys have developed not only a mentality of a hard number approach. In other words, there's no emotional attachment to this investment property. There's no emotional attachments, to these transactions. That you have developed systems that demand a very high standard, and then you stick to your standards when you're vetting a property. And if the numbers are not there, they walk away. And I love that because others would, look at their current performance and say, no, we really need this. And out of desperation, they might pull the trigger on a transaction that would just not be safe or profitable. You guys don't do that. And the other part of that is that in the passive world, where we are brokering a trifecta, basically, that His Capital is the broker, I'm the bank, and the guys that are flipping these properties or investing in these properties are the borrowers. His Capital vets the financials of the borrowers who are looking at a property that His Capital has already vetted. So you guys are looking at his financials, you're looking at his performance, you're looking at his record, and demanding before you engage in that type of transaction that those borrowers have a history of positive performance before you even enter into a transactional contract with them. So I'm really, really comfortable not only with the vetting process, but with the idea that the properties that we are investing in give me a position in the deal that assures that if worst case scenario, everything goes sideways, and it's investment and it's real estate, and sometimes things get weird. But because of the high level of preparation going into that, that's a very rare occasion. And worst case scenario, we hold a position in the mortgage arrangement, so that the property actually secures the investment. So it just really makes me comfortable to invest this way, because I know that there are not only multiple levels of security on the front end, but there are also multiple exit strategies on the back end, and that really makes me have a great deal of confidence.
Yeah, I agree. And, and the goal is to have a zero default rate. And we know that in the real world that that's not possible, but certainly get as close to that as possible. But if the worst case happens, it certainly can be the best case. So good point. Right. Shawn, could you expound a little bit how this has affected your lifestyle? And I'm excited to talk about this because we set out to help you as an investor, and you shared what you have dedicated your life to in the mission, and you actually have changed our lives. And how did you incorporate his capital funding, the whole note investing strategy, into what you do? And if you could share what you do and possibly give people an idea of your passion, that would be a wonderful story to hear.
Yeah, absolutely. Initially when I met with you guys, I met you, Steve, prior to our meeting about some investment situations, and followed up with that. And when I met with you, my entire goal really was just personal. I was trying to provide security and longevity for my family, and that has given me a great deal of confidence. We're in a great growth curve right now, which I wasn't seeing before, and so it's really revolutionized my thinking about how to invest for the future on the personal side. But in that meeting, when we finished, you were asking questions about our life work and what we do, and I was able to share about our 501c3, our nonprofit organization called Mission 823, and how we've been working in Ukraine for close to 20 years now, intervening on behalf of at-risk children, orphans, refugees, poverty-stricken children, human trafficking victims, abused and neglected children. All of those risk categories of children, we intervene on their behalf and try to build relationships and provide resources for them, place them in guardian or adoptive families when possible, build brick and mortar homes. We do youth camps for those traumatized children and connect them with counseling resources so that they can have some stability going forward. We depend to a great degree on volunteers that come and serve with us as camp counselors at those youth camps. And so it's a pretty comprehensive approach to, just serving a group of children who have no voice. And I fell in love with these kids, way back in 1995. We fell in love with Ukraine and with the culture and with the people, and just felt like God would have us to serve in that way. And so my family and I moved to Kyiv, Ukraine, and lived there, my wife and my two children, and we began to serve and have been doing that for the last almost 20 years. And so I thought, Steve, if this, has created so much confidence and reliability, dependability in my own life personally, why can't a nonprofit organization do the same thing? And I guess the buzzword for nonprofit organizations today is sustainability. And my thought was this, for hundreds of years, nonprofit organizations have been asking for $1 for a good cause, and then spending that dollar and then going back to their donors and asking for the same dollar again. And it's a repeated cycle that's kind of a hand-to-mouth scenario. And most nonprofit organizations that are worth their salt are are running close margins. You know, we're not asking anybody to live in poverty, and nobody's suggesting that to me. But you know, we run close margins. We run a tight ship, and we're very conservative in what we do. And basically, because of our heart for the mission, we send as much as possible. More than 97% of what we raise goes directly to the field. We have very low overhead and a very compact team, and depend on a lot of volunteers. But we're able to accomplish a great deal of work. So the idea that I could invest that same solicited dollar and have it go to work for me at 8 or 10%, or in the future, from what I understand, possibly even more with some new products that you guys are developing. But in the passive world, in the whole note world, 8 to 10%. And I could depend upon that dollar working for me 24/7, producing a yield that will solidify the foundation of our organization going forward, was a mind-blowing concept for me. I had never thought about the idea that I could not just take the donors' funds and spend them and then go back to those same very good, generous donors, faithful people who have been serving with us for years and years and years. But when I began to explain to our donor base that it would be possible to invest those dollars in this very safe way that we just talked about, that for us, the word would be stewardship. In other words, we feel like we have a responsibility to gain the most traction from the dollars that are given to us and achieve the greatest good. And we feel like if we can invest those dollars in such a way that they produce a passive, sustainable income, literally not just for the rest of our lives, but for the longevity of our organization, to the families that will follow us and continue serving children in Eastern Europe for years and years to come, long after I'm gone, those dollars will continue to work. And so we had a number of donors that really liked that idea and contributed very generously to us and helped us to deploy a reasonably large sum of capital. And it's generating an income for our organization to this day. And it's terrific. I've never seen that happen before. So we're doubling down on that, and recommend that churches and mission organizations and nonprofit organizations, just like large major universities all over the world have done for literally hundreds of years. And I just wasn't aware of it. I didn't walk in that world. I didn't understand that that world. But now I understand that most very large organizations, especially universities, use these methods to sustain their organization at the foundational level for generations. And so that's what we're trying to do with our investment funds, our trust or endowment with Mission 823, is create a great deal of sustainability.
And I like how we talked about your donors giving, and it was almost like we said the donors are giving you seed, the cash, but you aren't spending the seed, you're growing it, and you're actually investing the fruit. And the seed will continue to grow long after they're gone and long after you're gone, continuing to help these children in Ukraine.
Absolutely. And what I recommend is that, you know, of course, there's a yield to the investment, because we've already talked about the fact that it's going to produce, or you guys don't even get involved in the transaction. So the idea is that you take a portion of that yield and use it for immediate good, but then you roll some of that back. We would call it a tithe, you know, or a gift or donation, whatever. You skim some of that yield off and put it back towards the principal, so that the next time you roll into another transaction, you have a greater sum that produces a greater yield, because 8% of 10 is one amount, but 8% of 20 is obviously a greater amount. So we roll a portion of the yield back to the principal. And so not only do we have a sustainable, passive income, but we have a growing endowment as we move forward. And it's just a terrific way to, achieve solid results for our organization moving forward. So that's what we recommend to others as well.
Well, we hope we're around to see the day when Mission 823 is self-sustained completely. And we fell in love with your organization and the kids over there. In fact, two of them children from Ukraine, when we went over there with you, Shawn, we actually hired, and if they earned their way, in other words, performance, learned English and hit certain milestones, we would fly them from their country to Orlando, Florida. And as I speak, I'm going to look over to my right, and the two girls are sitting right to my right in our office today, living a dream. And we're so proud of them.
And that's the other part of this, and we haven't even discussed this yet, but in addition to really solid investment performance, is this adherence to a higher sense of purpose with his capital. And that's the main thing that attracted me to moving forward in a relationship with you guys, was the fact that you put your money where your mouth is. You don't just say, we want to do good in the world and then have that as a tagline on your website. Steve, just a few days after I met with you and with Rick Malero at his capital, the executive team got on a plane with me and flew to Ukraine to see what was going on, and then have begun to not only invest in the lives of these children, but have invested through our organization. And now there are two young people sitting in your office today from a village in Ukraine that are earning many times the national wage and learning how to outsource their newly found skills with technology. And that creates possibilities for thousands of children who feel like they would be trapped and desperate and without hope or without any opportunities for the future. And that's what we're trying to create in Ukraine and in Eastern Europe. And his capital is a part of that on a daily basis. They're working with us to save these children. And so you guys are true to your purpose. And that's something that I'm really proud of.
Lastly, Shawn, what would you say to someone thinking about getting started with their first whole note?
I would say do your homework, because truth is like an anvil. You can beat on it from every direction, but you're not going to wear it down. And so if it's not worth analyzing, then it's probably not going to stand the test of time anyway. So I know that if his capital came under the most intense scrutiny from a savvy investor, that what they would find is a solid anvil of performance and of character, of integrity, transparency. So my recommendation is do your homework. You will not be disappointed, and then start investing 20 years ago like I should have done. I really wish I had discovered these possibilities many years ago. But now that I do, I'm doing everything that I can with what I know. And so we're being as aggressive as we possibly can. We know that it's safe. We know that it's secure. And I'd recommend that that you do your research, that you talk to the people involved, talk to you, talk to Rick Malero and the others in the office. Ask for the names of other investors that you can sit down and have coffee with. And then as soon as you're comfortable, I would move forward as aggressively as possible, because the timing of the market comes into play there too. They can ask Rick about and you obviously about the timing in the market and what's going on in the real estate market right now, and why it's important to position yourself in certain ways at certain segments of the market cycle. And you guys are aware of all of those things, can explain it in layman's terms. And I'd recommend that you do, whether you're an individual or you're a corporation, or a nonprofit organization or a church or a mission group or whoever it is, I would recommend that you explore every opportunity and then take advantage of it as soon as possible.
And Shawn, lastly, have you ever lost any of your principal at his capital funding with whole notes, or have you ever made less than the 8% that you agreed upon?
No, in the last number of years, I haven't lost a dime. As a matter of fact, there was an instance where a borrower had some questionable scenarios going on in his life, and so his capital took responsibility and was keeping me apprised of the progress of this borrower. But then he reconciled everything, and it was fine. But in the back of my mind, I was thinking, okay, so let's say that the borrower defaults. What's going to happen then? Well, I already know from the contract and from the way that our relationship is built that actually that would have been a better investment scenario than if he had continued to pay like he had contracted with his capital, because the property itself was worth several times, after repair value, was worth several times what we were loaning to the borrower. So I felt completely confident in that. But I know I've never lost a dime. I've always grown, and we've always received the contracted 8% with his capital. I'm hoping for in the future some of those 10% returns as well, and I know those are possible. I know people that are actually achieving those. So no, sir, I've never lost a dime and never felt anxious that I might lose a dime with his capital. We've always received our yield from our investments, and they're growing, so doing well.
Wonderful. Shawn, thank you so much for your time today, and know that we're all cheering you on. We're cheering those kids on in Ukraine and Mission 823, and we appreciate you as an investor and more so as a friend.
We appreciate you, Steve, you and Rick and some of the others in the office that have been working with us and have actually been to Ukraine with us. We know that we're serving not only good, but a purpose that's much higher than us. The investment is not just for our personal returns, but it's in the world, make the world a better place. And I know that you guys are committed to doing that, and we're proud to be in a relationship with his capital.
Yeah, and right back at you, my friend.
Yes,
you
sir.
have a great day, and we'll talk to you soon, Shawn.
Okay, thanks, Steve. Appreciate you.
Thank you.